Welcome to Explain the Charts. Today, we're diving deep into Intel, symbol Intel, on this pivotal August 7th, 2025. We'll analyze the latest news, connect it to the chart data, and discuss what it all means for your trading decisions. Looking at the daily chart, a clear and challenging long-term downtrend has defined INTC's performance over the past year. From highs near $42 in March 2024, the stock has consistently declined, now trading significantly lower. Recent headlines are largely negative, certainly contributing to this prevailing bearish sentiment. Just yesterday, Jim Cramer publicly highlighted Intel's substantial $18.8 billion Foundry loss, advising investors to consider selling their stock. Compounding this, Fitch Ratings recently downgraded Intel's long-term credit to BBB from BBB+, signaling potential weakening of the company's financial health, which can directly impact its borrowing costs and investor perception. The market has clearly reacted to these developments, as seen in the steady erosion of value over the past year on our daily chart. We also noted news about Intel's advanced 18A manufacturing process reportedly facing issues, which could significantly impact future profitability and investor confidence. Let's zoom into the most recent action, from late July through early August 2025, to pinpoint the immediate impacts of some of this news. Here, we observe a sharp decline around July 24th, where the price dropped from around $23 to below $21, followed by a period of sustained losses. This aligns perfectly with reports from Robinhood indicating Intel experienced 7 straight sessions of losses leading up to Friday, August 1st. The stock notably closed at $19.34 on that Friday, reflecting this significant bearish streak and setting a new short-term low. This pattern of declines is clearly visible on the daily chart, marking crucial psychological support levels being tested. Now, let's switch to the 1-hour chart to examine the granular details of this recent volatility, specifically from July 23rd to July 25th. Focusing on the period around July 24th, we see the hourly candles confirm the aggressive selling pressure, with multiple large red candles appearing. High volume accompanied these sharp hourly drops, indicating strong conviction from sellers and a rapid capitulation by buyers. However, despite this overall negative backdrop, our daily chart data then shows an interesting short-term bounce on August 5th and 6th. This suggests some buying interest emerged at these lower price levels, potentially viewing the stock as oversold. To get an even closer look at this unexpected rebound, let's narrow our view to the 15-minute chart for August 4th through August 6th. After trading sideways around $19.50 on August 4th, we witnessed a significant upward surge starting August 5th, with prices climbing past $20 on substantial volume. This rebound continued into August 6th, pushing the price to $20.41 by the end of that trading day. This recent positive price action could have been fueled by short-term traders covering their shorts or potentially by speculative news, such as Ericsson's reported discussions to invest hundreds of millions in Intel's networking infrastructure business. However, this glimmer of short-term optimism is now likely to be severely challenged by the very latest news emerging on August 7th today. As of today, August 7th, President Donald Trump's very public demand for Intel CEO Lip-Bu Tan's immediate resignation has sent the stock tumbling again in pre-market trading. This major political pressure, fueled by concerns over the CEO's alleged ties to Chinese entities, introduces significant new uncertainty and fear into the market. This news, occurring after our provided chart data concludes on August 6th, suggests the recent short-term bounce will likely be quickly reversed, validating current analyst bearish sentiment. The ongoing strategic shifts within Intel's manufacturing operations, including multiple senior executive departures as the new CEO implements changes, further add to the company's volatility and operational risk. This confluence of negative news creates a challenging environment for Intel, overshadowing any minor positive developments like potential investments. From a technical perspective, with the latest news in mind, the critical short-term support level now sits around the $19 mark, a level it recently bounced from but may retest. Should this $19 level fail to hold under the renewed selling pressure, the next significant support could be as low as $18 and potentially even pushing towards the lowest analyst forecast of $14. On the upside, immediate resistance is found around $20.40 to $20.50, which was the closing price on August 6th. A stronger resistance zone exists near $22, where the stock consistently failed to break out in late 2024 and early 2025. Breaking convincingly above $22 on high volume would be a very positive sign, potentially paving the way towards the average analyst price target of $22.17 to $22.42. However, reaching the higher analyst forecast of $28 seems highly challenging given the multitude of current headwinds and lack of strong positive catalysts. To recap, the $19 level is vital support, with $20.50 and $22 acting as key resistances. In the short term, the overwhelming news flow, particularly the Trump controversy and the recent credit downgrade, points to continued bearish pressure. The likelihood of a further short-term decline, potentially retesting or breaking below $19, is high, perhaps 70 to 80%, reinforced by the breaking news today. A bounce back towards $22 is possible if the CEO's situation sees a swift, positive resolution and more concrete good news on Foundry performance or Ericsson investment emerges. But we assign this a lower 30 to 40% likelihood under current conditions. For a longer-term bullish outlook to emerge, we would need to see a confirmed reversal pattern, potentially breaking above the $22 resistance on significantly increased volume. Always keep an eye on official company statements regarding leadership and strategic direction, as well as any further political developments related to the CEO's alleged ties to China. Additionally, monitor overall market sentiment and the broader semiconductor sector's performance, as Intel does not operate in isolation. Thank you for tuning in to Explain the Charts. We hope this analysis helps you make informed trading decisions.